Well, good morning, Ken. Thank you for joining us today.
Thanks for having me on.
So, how was hedge fund performance in May of 2024?
May was a good month. We saw a reversal of a lot of the trends going back to April, a lot of the negative risk off trends, and we saw risk on trends dominate in the month of May, with leadership for the month reverting back to equity hedge strategies. We saw a little bit of a pullback for the month in macro strategies, although macro is still the leading area of performance when we consider the year to date so far.
Right, and I know we're going to move to that, but looking at May specifically, what would you say were the leading strategy areas in the month of May?
Yeah, as I was saying earlier, you can see the HFRI equity hedge was the leading area of hedge fund performance in May with a gain of about 2.5%. That's a little bit ahead of US equities, which we have here at 2.3%. But other strategies did well as well. You can see here event driven, which is also a directional strategy, but also includes M&A and distressed and special situations, gained about 1.6%, a little over 1.25% for the composite, showing all hedge fund strategies. And then you can see here fixed income based relative value, the HFR 500 relative value, up 60 basis points. The same for the onshore HFRI 400, and a gain also for the HFRI 500 composite of about 40 basis points. And macro, as you know, the leading area had the first decline for the year, down a little over 0.5%. But as you'll see in the later slides, the macro strat, and that was obviously as volatility fell for the month. But you'll see in the later slides that macro, even with that decline, is still the leading area of performance thus far for 2024.
Okay, so looking at May specifically, do the sub strategies give us some insight into what's going on?
Yeah, absolutely. You can see here, and I've included the cryptocurrency in the sub strategy performance. Really, the leading sub strategy area of hedge fund performance is equity hedge energy based materials, which you can see here gained 3.6%. And that's not surprising given everything that we know that's been going on in the energy markets. And it's been a good month for them for sure. I'll comment briefly on the cryptocurrency index. Obviously, this had a very strong month. This underlying Bitcoin and other coins did very well. The HFRI cryptocurrency funds are separate from the HFRI, so we track them, but we just don't include them in the HFRI, which is specifically private hedge funds and not cryptocurrency funds. So that it's its own index, but you can see that obviously had a very strong performance of 12.5% and very strong performance thus far for the year. Technology did very well as not surprisingly, nearly 3.25% for the HFRI technology index. Multi-strategy, which includes both technology, energy-based materials, also fundamental strategies in the equity space. A gain of about 3.1% fundamental value there. So really, that's four top strategies, all sub-strategies, all in the equity hedge complex with a gain of 3%. And we also have risk parity. Risk parity is also not included in the HFRI, but it was a very strong performer for the month of May. And that's really because you saw strong risk on sentiment dominate. You saw interest rates fall. You saw equities rally. Risk parity did very well, which obviously has those two things as well as currencies and commodities.
So, if we circle back to looking at performance from the start of the year, you mentioned macro is still the big story. Can you elaborate on that?
Yeah, absolutely. You can see here that thus far for the year, even with the small decline in the month of May, still the leading area of performance at about 6.6% gain for the HFRI macro, which is very strong. As I said last month, it's great that we see macro performing not only, I mean, it's categorically uncorrelated, the lowest correlated of all of the hedge fund strategies. So it's not surprising when we saw a risk off environment that those strategies did well. That's actually what we see more often than not. But what's been great about the last 6 months is that macro has gained in both risk on and risk off environments. There's really a lot of good tactical portfolio adjustments that have taken place there. And so really navigating these shifting market trends and microcycles that we're seeing from month to month, which are changing a lot based on this very unstable geopolitical environment that we find ourselves, very heightened sensitivity to inflation and interest rates that portfolio managers are responding to, macro has navigated this volatility very well. So 6.6% gain. In addition to that, though, equity hedge is really almost in the same place. You can see about 6.5% gain. And obviously that was the leading area in May. So it really did they've really gotten to be very close to each other in terms of the performance thus far for 2024, although they're sort of performing in different risk paradigms in different places in the market cycle. Overall, the composite, the HFRI fund weighted composite, has gained a little better than 5%. The onshore, really in the same place, 4.9%. Only a little bit lower for the HFR 500, 4.1%. Relative value is primarily fixed income based strategies. And so these are very steady, lower volatility, categorically not as directional as equity hedge and event driven. 3.33% there, 2.8% for event driven. That sort of lagged right out of the gate earlier on in 2024, and it's come on more strongly in the last few months. And see all of those well ahead of U.S. equities as we see here at 2.6%.
Right. And then if we were to look more at sub-strategies from the start of the year, do you see the same trends continuing?
Yeah, you really have seen a continuation of a lot of the trends, even not only for 2024, but even going back to the very end of 2023. To my comment earlier on the cryptocurrency side, we track those. They have their own index. They're not included in the HFRI. So putting them on this slide shows you what the performance is, but that's not included in the fund weighted composite when you see it. So obviously there, 38% gain for the cryptocurrency index, very strong. The leading area of sub-strategy performance first 5 months of the year with a gain of 10.3% is the systematic diversified, which you know is quantitative, trend following, macro strategies, liquid instruments, really all different types of assets, and that are really just taking positions based on forecasting whether or not this asset is likely to continue going up or the weakening of the trend, whatever it is that they are forecasting. That's the leading area of sub-strategy performance across the entire industry, which is very exciting. Again, those strategies typically perform, and they're agnostic to whether or not market's going up or down, or whether it's risk on or risk off, because they're equally likely to be long or short in any circumstances. So a very similar performance from energy-based materials, the leading area for May, also 10.3%. This is obviously much more of a specialized directional equity strategies, 10.3%. We know everything that's going on with the geopolitical instability is certainly impacting the energy markets, and you're seeing strong performance there. Third leading area, 9.75%, is for the equity hedge multi-strategy. We touched on this earlier. That's really across all of the different funds that have portfolios in all of the different multiple of the different sub-strategies, including fundamental, quantitative, energy, technology, any of those rolled together into a single fund. That's where the HFRI 400 equity hedge multi-strategy. And then lastly, technology, not surprising that this is a leading area of performance for the year, nearly 9.6% gain for the year. And that's really, as you know, there's been so much emphasis in the last 18 months on the Magnificent Seven, large cap equities. That's really continued on through the first 5 months of the year, with a little bit of a pullback in the month of April, but still a leading area of hedge fund performance thus far for the year, and well ahead, as you see, well ahead of U.S. equities so far for the year.
Thanks, Ken. That rounds us out for the month of May in 2024.
Yeah.
Thanks for joining us.
Yeah, I just wanted to add that, we have the new website up, so please visit www.hfr.com. There's a lot of great new information there. If you're watching this video, we do regular performance updates on YouTube. Please subscribe to the channel, and if you have questions about other things that you'd like us to talk about, we'd be happy to address those. If you'd like to set up a call, you can reach me, Ken Hines, or anybody at HFR. You can set up a call with that. And then finally, when you do go to the website, we've got a great resource there that we call the Investor Guidebook. Please click on that. You can download it. It really talks a lot about all of our indices, all of our investable indices, and the use cases that they have for so many financial institutions. So please take a look at that. And if you have questions, please feel free to reach out to me or anyone at HFR to set up a call. Thanks.